Fortune favors the bold, which is why billionaire Eric Sprott and legendary investor Rick Rule are taking advantage of the lowest valuations in the mining sector in over 3 decades by accumulating millions of shares of this tiny new stock led by Keith Neumeyer, a mining entrepreneur who has already built 2 separate billion-dollar companies. This new venture, starting with 18 assets on day 1, including gold, silver, copper, and zinc projects, has already identified 60 additional quality assets in distressed companies that management will work to acquire. To learn more about this incredible opportunity, visit futuremoneytrends.com/fortune.
Well, greetings everyone, and welcome into crushthestreet.com. I'm here with Rick Rule of Sprott Asset Management. He's a very successful investor. He's a fan favorite at conferences, and he's one of the smartest people I've ever got to listen to and possibly meet. Rick, thanks so much for joining me today.
Thanks for the opportunity, Ken.
Rick, today I wanted to get your perspective on the economy, the dollar, and gold. And I figured we'd start off here. If the U.S. was a stock on the NYSE, just looking at the balance sheet, I would have assumed most investors would have dumped its shares by now. Is it due to ignorance from the rest of the world that the U.S. government can borrow and spend, and the citizens enjoy an artificially high lifestyle?
I think the U.S. dollar does benefit from having no competition. My friend Doug Casey, quoting somebody, likened it to the prettiest mare in the slaughterhouse. When you use the balance sheet analogy, things get trickier because according to U.S. law, you and I are assets. We think of ourselves as citizens, but in fact we're chattel. If our fellow citizens vote to increase the level of our servitude, which is a different way of saying raising our tax, the government has the ability to extort greater shares of our income. The second thing with regards to the balance sheet of the U.S. is remember that the wealth of the U.S. is deep and broad. And so I think from a balance sheet perspective, unfortunately, the U.S. government has a lot of room left. From the point of view of the balance sheet relative to the income statement,
right,
you ask a very interesting question. You'll recall in 2011 when gold was a more popular investment instrument.
Absolutely.
That the narrative went that $14 trillion in on-balance sheet liabilities and $58 trillion in off-balance sheet liabilities were unserviceable. It's interesting now that we're much more complacent about the serviceability of those liabilities when the on-balance sheet liabilities have advanced from 14 trillion to 18 trillion, and the off-balance sheet liabilities have advanced from 58 trillion to something like 70 trillion. Not Rick Rule's numbers, but rather numbers from the Congressional Budget Office.
Sure.
So I think that's very interesting.
Yeah, well, it's almost like there's an ignorance. There's a disconnect between what Main Street feels and what's going on. There's not an efficient price into the dollar or the U.S. economy. The rest of the world still sees it as a safe haven, and they see our military all over the place, and the media and the government projects these positive images of everything, and everything sustains itself. And it's just really an interesting thing, because I know you've talked about it in the past that inevitability doesn't mean imminent, something's going to be right away. So it's just, I don't know how long this can last. And of course this ties into gold and the dollar, because it kind of suppresses gold prices and it keeps the dollar relatively strong. So it's interesting, this dynamic that's going on between the U.S., the rest of the world's perception, and precious metals prices in the U.S. dollar. Any thoughts on that?
Well, it's interesting to note, Ken, that you increasingly speak to a worldwide audience. And gold is in a bull market in every currency except the U.S. dollar, and has been for 14 months.
Right.
So as an example, if you're a Japanese person and you think in the yen context, or a Brazilian person and speak in the real context, or a Russian person speaking in the ruble context, gold has performed very well for you. It's in the context of the U.S. dollar that gold has done poorly. And so we are taking a very U.S.-centric approach. I think it's also important to note that gold investors tend to have an apocalyptic, all or nothing point of view. The world didn't come to an end in the 1970s. We had some social strains that caused our confidence in the U.S. dollar to shrink. The consequence of that was that the gold price ran from an admittedly price-controlled $35 to $850. And this is an important piece of history to look at, Ken, because gold doesn't need to win the war against the dollar, nor will it win the war against the dollar. It needs to lose less badly.
Interesting.
And that's what I think is inevitable, not imminent. Gold doesn't have to supplant the dollar as a medium of exchange. We don't have to have the great collapse that is the odd apocalyptic dream of so many strange gold bugs. What really has to happen is that the same level of questioning needs to take place that took place in 2001 or 2002. You may remember, you may not. In 2000, the gold price was moving well in currencies other than the dollar, but not in the dollar because the dollar was strong. In 2001, the gold price began to move in the dollar and in other currencies. And in 2002, the U.S. dollar rolled over a bit, and gold did very well. And if past is prologue, and I would suggest in this case it is, that the period that we're in right now is analogous in that context to the year 2000, where gold is doing well in currencies other than the U.S. dollar. And again, if past is prologue, it's not that the dollar is going to blow up or that the United States is going to join the ranks of extinct countries, just that gold will do less poorly against the dollar. And in the context of using the dollar as the denominator of gold pricing, gold holders will be pleased.
Yeah, that's interesting. I was going to ask you if there was any historical precedence with what's going on right now to something in the past, but what I'll move on to is, I know it's speculation, but now in 2015, do you see precious metals, specifically gold, going higher due to currency concerns, or more just from a supply-demand standpoint?
Supply-demand is always problematic because almost all the gold that's ever been mined is supply. The only precious metals that you see a compelling case in the context of supply and demand are platinum and palladium, and that's the subject of a whole different call. I do see gold going higher, although God knows I've been wrong for the last 3 years. I do see gold going higher in the context, as I say, of it having larger market share in the savings matrix of savers and investors worldwide. Not, as I say, winning the war against the dollar, simply losing the war less badly. Not on a supply-demand basis, but more on a sort of a rational allocation basis.
Okay. Well, Rick, I want to shift gears a little bit because I want to get your perspective on something, and that's real estate. Now, I look at the kids graduating high school and college now, and I feel bad because it feels like the average home in most metropolitan cities cannot be purchased with the average income. And has this always been the case in your, experience, or does real estate tend to always outpace income, or will there just be a correction where the kids now that are graduating and getting their jobs will be able to afford homes in the suburbs of LA and San Diego and just different communities around the U.S.?
I think single-family residential real estate in the United States really started to move well in the early part of the decade of the 70s. And there were two reasons for that. One was the reality of inflation, the fact that the replacement cost of every aspect of single-family real estate, either from the land component through the fees component all the way through construction, began to rise rapidly, which increased the nominal value of the existing supply of real estate. But there were two other factors. One was, through the decade of the 60s, rapidly growing real incomes in the United States. And so real estate was extremely affordable relative to people's increasing incomes. But the third factor, and this can't be overstated, was the incredible demographic bulge provided by my generation, the baby boomers. They began the process of household formation. I think the outlook is mixed now. The U.S. economy, from an employment perspective, is not either as good as the government would have us believe, nor as bad as the critics would have us believe. In fact, the number of Americans employed has grown reasonably rapidly. The problem is that too many of the jobs that have been filled are low-wage, low-skills jobs. Mm-hmm. So the real disposable income of American workers on the aggregate has not increased for 20 years. A separate dichotomy is the fact that the economy has generated an awful lot of jobs openings. The help wanted requests are incredible, and the number of jobs available for occupancy is very high, but there's an incredible mismatch between the skills that are offered up by America's labor force and the skills that are required from America's employers, meaning that the potential employees are either misqualified or mislocated relative to the jobs being demanded. We're beginning to see in hot spots in the United States, the Bay Area of California is an example, Southern California, Research Triangle in North Carolina, fairly rapid wage expansion now, which we haven't seen for some period of time. But as I say, there's an incredible mismatch in the economy between the skills on offer and the skills being demanded. And I suspect that the consequence of that is that until we either loosen U.S. immigration standards to allow more skilled workers to come into the United States, or until the existing labor force manages to re-educate itself, which is a much longer-term problem, that we're going to see this incredible mismatch continue.
That's interesting. So is it safe to say that you're somewhat bearish on real estate for the long term?
It depends on where you are in the country. The top end of real estate, as an example, in California is doing extremely well.
Right.
Because you are seeing explosive wage growth in California among skilled workers, engineers, people like that. You are seeing people that are getting paid $120,000 a year getting lured away with $160,000 offerings. In other words, 40% wage bonuses.
Right.
But that isn't affecting entry-level housing or middle-class or lower middle-class housing. In other parts of the country, the extraordinarily low interest rates that you see right now, particularly with regards to 30-year fixed mortgages, make single-family real estate fairly attractive. I don't see necessarily that you're going to experience the same rapid appreciation in single-family housing that earlier generations have experienced. But certainly the delta between the cost of ownership and the cost of renting in many parts of the country is beginning to favor ownership. And my suspicion is that in those parts of the country, you're going to see rental escalations at 3 to 5% compounded, which means that the delta between ownership, at least if you utilize a 30-year fixed mortgage, and the cost of occupancy with regards to rentals will increasingly favor ownership by people in your generation.
Well, that's great. I want to switch one more time over, and we're going to talk about water. And this is a big issue because we're getting now into spring, and specifically in California, Nevada, and Arizona, we're experiencing a pretty substantial drought. And if we don't get another rainfall, serious rainfall, in terms of in the year over the next little while, what do you see happening?
This is the year when the rubber meets the road in the West, really from Texas west.
Wow.
California will, of course, be the most dramatically impacted because we're the most idiotic water users. Mm-hmm. We could solve this problem in the West and the Southwest if we abolished laws associated with water allocation. If we allowed a free market in water, it would be very, very hard on the agricultural community, obviously, which is built on the back of subsidized water. Mm-hmm. But if we stop doing things like growing rice in the desert, after a wrenching adjustment, we wouldn't have a water crisis. It's interesting to note that Chile, which has much less water availability relative to GDP than the United States does, has no water allocation problem because they let the market allocate it. Mm-hmm. But that doesn't seem to be something that wants to happen in the United States. Free market physics is where water flows uphill to money. The physics that we have is more democratic physics, where water flows downhill to votes. And much of the problem that we have in the West and the Southwest is a function of the fact that the water price has been subsidized for 100 years. And people always demand free or cheap goods. This is the year where you can't allocate by votes because there isn't enough water to go around to people who have already been promised access to it.
Right.
And it's going to be very, very interesting to see what happens. My suspicion is that here in California, 2015 will be the first year that water law in California comes to be challenged. It hasn't been worth having the political fight between rural interests and urban interests, and subsidized interests and unsubsidized interests, because there's been enough water to go around so that we didn't need to fight the fight. This will be the year that sort of Cadillac communists in West Los Angeles watch their $150,000 landscaping get turned into wilted lettuce.
Sure, turned into a desert.
This will bring the issue into sharp focus. Right here in San Diego County, two observations. Looking up my window, I'm looking at a $1.8 billion desalination plant under construction. A plant that will generate water for about $1,000 an acre foot, obviating the need to take agricultural water that would cost us $400 an acre foot. That's the sort of delta that has to do with free market physics. The second part of the San Diego equation is the avocado grower that doesn't have access to subsidized Williamson Act water, which is resulting in about 8,000 acres of permanent crops just in San Diego County going to crop heaven, where they turn the water off and just let the trees die. And that's a scene being repeated around the state. And frankly, it's a very, very healthy set of circumstances.
Interesting.
There is not a way to sustain the California agricultural economy at its current size without hugely subsidizing water. And while it's a terrible thing for the family farmer, and while it will increase food prices around the United States, it's the inevitable price that we pay for having subsidized a certain economic activity, i.e. farming, for 100 years at the expense of our ability to carry on that activity with the resources available to us.
So you already alluded to it, but you see more of a government solution versus a privatized solution actually coming to pass.
Churchill famously said that Americans always do the right thing when they run out of all alternatives. And when we come to the point in California where we realize that we have promised each other 25% more water than we have, you're going to have to find that 25% somewhere. The only feasible way to find it is to save it. And I think you will begin to see a market mechanism come to place in California because we have no alternative. Right now, agriculture in California consumes about 80% of the water used in the state.
Right.
So you use 80% of the water in the state to generate 3.5% of the state's GDP. That isn't going to last.
No.
You also have subsidized urban users, golf courses and things like that. The idea that you are using 5 acre-feet of water at an avoided cost of sort of $1,200 an acre foot over 150 acres for a municipal golf course, when you look at the real economic cost that the rest of society pays to subsidize golfers, the golfers are going to have to come to the party just like the rice farmers.
Well, you hit a sensitive topic there, Rick. I'm an avid golfer.
I'm sure I made every one of your subscribers angry with something I've said today, which means I've done my job.
Well, good. Well, hey, Rick, if people would like to reach out to you and learn more about you or just find your work, where would they go?
3 ways to do it. If they're in the United States and Canada, call me at 800-477-7853. That's 477-7853. Around the world, or if you don't want to talk to me, you can find us at the web at www.sprottglobal.com. And finally, to hear from us 3 times a week, subscribe to Sprott's Thoughts. It will come to you 3 times a week. I guarantee that your subscribers will get their money's worth because it's absolutely free.
Absolutely. Well, that sounds great, Rick. Thanks for joining me today.
Thanks as always for the opportunity, Ken. I appreciate it.